Good morning, good afternoon, everybody. It's 12 o'clock and we are live. So, Paul, I just want to check that you've got your sound in place. Can you say hello? Testing. Hello, Paul.
Hi, Sasha. Very good to hear from you and hope you can hear me.
Loud and clear. Perfect. Okay, I think that's everyone in. So, just a little bit of housekeeping on the process. There's a Q&A box. You should all be able to see. It's on the top row of my desktop. If you click in the Q&A, you can pop in a little question, but don't be shy. Feel free to raise your hand and I'll unmute you, and you can ask a question directly as well. I think it's very good to get that interactive level. So yeah, please pop in the questions. I don't want to be reading everything out. I have some pre-submitted questions, and but it'd be good to hear anyone else who did want to raise their hand and ask a question properly. So I think Paul, perhaps just over to you, just to give us an update on what's been happening recently, the recent announcement with ABG Sundal Collier on the financing, and if you want to take it from there, and we can drill down into it in a little bit more detail after that.
Sasha, thank you very much for setting everything up, and thanks to everybody for jumping on the call. Just very, very briefly, we're absolutely delighted to put out that last announcement. As those of you who are familiar with, getting somebody like ABG Sundal Collier across the line is a big effort. And that puts us in line to raise somewhere between 10 and 25 million US dollars. And just to recap on that, the purpose of that funds are: the minimum amount, 10 million, is the amount we need to complete FEED studies. There's a front-end engineering design before the main financing. And the 25 million means that we can then do pre-orders for long lead time items ahead of the main financing. So somewhere between 10 and 25 million. 25 million would be perfect. 10 is the minimum that we need. And the idea is that we go out and raise this money at the asset level. And just to reiterate something I've been pushing for quite some time now, doesn't seem to have fully landed. We're not proposing to dilute at the Alkemy level at all, apart from small amounts of G&A funding. And as those of you will be very familiar, we've been debt funding the company to date. The idea is to keep the number of shares on issue at Alkemy at their absolute minimum, and to fund Tees Valley Lithium, the subsidiary, at the Tees Valley Lithium level. And the way we're doing it is putting this convertible bond finance in at the TVL level, and then roll that into either a trade sale, which is probably unlikely, but more likely, what we're aiming for is an IPO sometime next year. And so just to broadly go through the milestones and the economics as we see it, we're targeting, and this is on a per share basis at the Alkemy level, £5 per share in February. And we've got 3 milestones for that. One is obviously we need to raise this money from ABG Sundal Collier, and we'll put that money in the bank. The second milestone is that we will be 2 months into the FEED studies. So there'll be an update on the FEED studies, and basically that will give some indication of where we're going on the capital and operating costs, make sure everything's on track. And the third, most importantly, is we will be kicking off the IPO process. So aiming to have an IPO in the second half of 2025, and we would kick off the IPO process in parallel with the main financing. And we think those 3 milestones are as on a reasonable estimate. If we, at that point, we should have no more than 10 million shares on issue at the Alkemy level, and at £5 a share gives a market cap of £50 million. So we think that's quite reasonable. And then aiming for the main financing, the structure of the main financing is, again, we've talked about this many times, is a straightforward bond finance, which is a form of debt. So it's roughly 60% debt, 40% equity. And then we've got the conversion of this convertible bond we have now that we're putting in place. So that might be up to 25 million at that level. So the net effect is, we think, will be that Alkemy will end up owning around 40% of the IPO of Tees Valley Lithium. And the intention is, on that basis, to distribute those shares directly to Alkemy shareholders. In other words, Alkemy won't hold them as a company. When we IPO, they go to Alkemy shareholders, who will then have tradable stock in a new listed company on the the standard list of the LSE. And we think that the value of that 40% stake will be, we're thinking £100 million. Obviously, there's a lot of assumptions in that, but that's our target, which, if we've only got 10 million shares on issue, means £10 a share. So that's our target next year, is £5 a share for February, and then hopefully an exciting IPO in the second half of 2025, and a distribution to Alkemy shareholders, which we hope is the first of several distributions. So Alkemy, Alkemy is an incubator, incubates companies like Tees Valley Lithium and launches them, and then Tees Valley Lithium that can go off and grow in its own right. Alkemy can then look at other stories, other investments that it can incubate. And just to reiterate this point, I get asked over and over again, what about dilution at the Alkemy level? The whole point of the Alkemy structure, financing at the asset level, is so we don't dilute at the Alkemy level. So please don't ask me about Alkemy dilution at the Alkemy level. That's the whole purpose of this structure, is not to dilute at the Alkemy level, is to leverage at the asset level. Sasha, I hope that's helpful. Hope that makes sense, and I'm very happy to take any questions.
Very good. I have a few questions. Whilst I dig them out, if anyone with questions would like to raise their hand, then I'll kind of queue you up and let you go after that. Paul, I have some from a Steve Wilson, who can't make the call. So he has said, first of all, ABG have a great track record. Can you briefly explain how you ended up with them? So maybe a little bit more about who they are and what they specialize in as well.
It's relatively easy to look them up. They're one of the biggest bond issuers in Europe. They deal with everybody from the Norwegian sovereign wealth fund through to small private equity style, family office style subscribers, and they have a huge following, and they regularly do issuances in the hundreds of millions, if not billions. So they're a very, very big issuer of bond, and so they do equity as well, across Europe and including into London. How do I know them? I've known them for quite some time. I first came across them in around 2015, so I've known them for 10 years now.
Okay, thanks, Paul. So, as mentioned in the RNS, scratch this question. Regarding all of TVL being IPO'd, would that just be the whole of it, or just tranche one? In an ideal world, after the IPO, would you want to keep a sensible percentage or cash out?
So good question. So the idea is that we would distribute 40%, that whatever Alkemy ends up being diluted down to in TVL, it would get distributed to shareholders. Then TVL in its own right would then grow. So at the moment, as I think what the question's alluding to, is it's all the numbers we shared with is just for the first train, and TVL is looking to do 4 trains. So there's growth within TVL. So it'll be up to the individual shareholder who receives the TVL shares whether they want to hang on to those shares to participate in the growth or to cash out. So we want Alkemy to be a company that distributes value to shareholders, and it's up to the shareholder to decide whether they want to hold and cash out or whether they want to continue with the growth.
Thank you. So Alkemy then wouldn't hold any shares after they distributed them to the shareholders following the IPO. Alkemy would move on to something else, but we would all, as a shareholder, you'd be part of the growth story on TVL going forward.
That's right.
Okay. Here's one on pricing, which you've gone over a little bit, but it's good to reiterate it. All IPOs need a price range. How is this going to be achieved, and by whom, over what timescale? If it's 2025, as mentioned, it probably has to be done alongside feed. Hopefully that makes sense, but if you could break that down a little bit to reiterate.
Yeah, no, that's very much what I was saying. So that's why we're announcing the IPO process starting in February, because as the question has rightly pointed out, it will run alongside feed. And once feed's complete and main finance is able to be drawn down, and then the IPO, that's the equity issuance, runs directly alongside, in parallel, in sync with the bond issuance. And how's it priced? Well, obviously brokers price companies on forward earnings. So we've looked at chemical and industry price earning ratios, and we've taken a a very conservative approach to that, and just based on train one. So yeah, we'll have the usual arm wrestling match with the broker over the pricing at that point. But as everybody on this call knows, brokers generally price based on comparables. So if you want a guidance on what TBL will look like, as we would say, let's look at comparable price earnings ratios in the sector at that time.
Okay, thanks, Paul. Third one from the same individual. Obviously, the full management team will need to be assembled at the same time as the feed. Do you have people in mind, and is this achievable?
Yes, that's part of the work that ABG were doing with us. So yes, we would expect to announce the management team and the growth of the team in the near term. So by the time we get to starting the IPO process, one can imagine that the key appointments will be in place.
Okay, thank you. Okay, another question from a Matt. Will ABG have the ability to flex the terms of the convertible bonds, equity financing, interest rate, discount to share price on conversion, share price? So yeah, he's asked quite a lot there. To ensure, will they be able to flex the terms of the financing to ensure that the full 25 million is placed or got away?
Yeah, good question. No, that's it. The answer is yes, in short. Yes, obviously they are going to a market that's that moves around a bit. So I think if the question is if there's sensitivity to pricing, can ABG flex the pricing and make it more attractive for the investors? Yes, they can.
Okay, thank you. Any questions from the floor? If you want to raise your hand, I'll mute you straight away.
Thanks, Sasha, and thanks, Paul, for taking the time today to talk to us. I did lower my hand because actually quite a few of my questions have been answered in your intro. But Paul, can you give us a bit more detail in terms of what you've actually been through with ABG in terms of due diligence to get to this stage?
Broadly, they have to test the business model to see whether they think it works. They have to test the key business model elements, not just in terms of whether it works or not, but in terms of whether they are people they want to do business with, because obviously it goes through what they call their engagement committee. So if you like, the provenance of everything we do gets tested because they don't want to be associated with anything isn't tier one. So we're fortunate, John, that I think you're aware that our customers are potentially some of the biggest names in Europe, and our feedstock suppliers are some of the biggest names in the mining industry. So a lot of the review was about who they're dealing with, and it's, as you can imagine, it's KYC on steroids with these guys, because bond finances are a lot more sensitive, I think, to the provenance of the transaction they're dealing with and who they're dealing with, and perhaps the equity market is. So what have we been through? Extensive due diligence and KYC, I think, is the best way to describe it.
Okay, thank you. And I guess ABG must be pretty confident you can get this bond issuance away, based on the due diligence so far and the client base.
I don't think groups like ABG take on clients if they don't think they're going to do it. Yeah. There's just no point.
Yeah, no, and maybe just two more quickies if it's okay. ABG, are they the potential main bond financing for the project itself?
Yeah, that's a good observation, John. Is yes, of course, that's why they're doing it. They're not in the business for $10 or $25 million raises. There's a small bond issue for them is $300 million, which is the size of that's the total size of our capital. So this is right at the bottom end of the range for them. But obviously they're in it because they can see 4 trains. And 4 trains is I don't know. Be careful what I say here, but it's probably $500 million worth of bond financing over 4 trains. So they're in this now for the bigger picture rather than this 10 to 25 for them is tiny compared to what they do normally.
Okay. And then just based on the timescales, I think you mentioned there, February might be 2 months in, so thinking with a fair wind, you're hoping to get this completed in terms of FEED funding by the end of the year.
Yeah. Yeah, you can interpret that. I mean, please, I don't want to be held to. I always get beaten up for this. I'm telling you right now, that's our target. And all the elements of the 3 elements I've mentioned to you, we've internally reviewed it. We believe, and we've got the timetables. We believe they're all deliverable. I don't want to break it down any further than £5 in February.
Yeah. Oh, cool. No, thanks, Paul. Yeah, just to me, I just see this as being the kind of key that unlocks everything. Actually, it feels like it's a pretty major milestone to get them on board and kind of start that unlocking process. But
yeah.
Thank you.
Okay, thank you very much, John. Alex, you're next. I've pressed the allow mic button. I think you're unmuted now.
Hey, Paul, can you hear me?
I can, thanks, Alex.
All it is, Paul, just a quick one. I know you can't give any details, timeframes, or anything like that, but with the joint venture with Syrah and the graphite, is that something that's still in the pipelines, like on the cards type thing?
No, I don't think so. I think the graphite price and the challenges that Syrah have experienced means that we're keen to move forward, but they're not at this point. But that doesn't mean that things don't change in 6 months' time. So all the elements for the graphite deal, the graphite joint venture, are all there. But when we push the button, will be very much dependent on Syrah and very much dependent on the graphite price. And right now, it's not looking good. As in, it's a terrible time for graphite. So I would say to you, I'd sort of take it out of your thinking. It's there in the background, but it's not something we're actively working on at the moment.
Cheers, Paul. Thank you. Cheers.
It's interesting. The US government just gave Syrah $150 million loan as well. I don't know if you caught that, but just shows how strategic the securing graphite is for the future.
Yeah,
they haven't been able to do very well. They're producing mostly small fines, which is the cost of that is reduced quite a lot actually. But the value is in the downstream. So yeah, I guess I have to see where you go with that. They were thinking of the right direction.
Look, the strategy for Tees Valley Lithium, and whether it's Tees Valley Graphite or Tees Valley Manganese, is all the same. It's basically Europe's going to need a supply chain for these, shall we call them, battery grade products. And there's lots and lots of mines out there, lots of lithium mines, lots of graphite mines, lots of manganese mines, and they all need to access the European market at some point. And we think our strategy of being the refiner, which is in the European market, which has all that, the provenance issues, and those who are familiar with the chemical industry will know that you can't produce a product somewhere around the world and just ship it into Europe. You need all sorts of provenance rules to rules of origin, etc. So our model, we think Tees Valley Lithium will prove up the model, and we think it will then, both Tees Valley Lithium can expand, that is, do the 4 trains we're talking about, but also it will validate the model for graphite, and whether it's with Syrah or somebody else. And we're looking at manganese as well along the same lines. So TVL is the pathfinder for this, and if TVL works, it opens the door for others.
Okay. Any more questions? Please raise your hand. I'm going to ask some from the Q&A box now. What have ABG Sundal Collier indicated in terms of expected timing to close the book on the $25 million bond?
I don't want to give any more timing other than the £5 in February with those 3 milestones. So I'm moving 3 very clear milestones. 1, we'll have the money in the bank. 2 is we'll be 2 months into the feed, and 3 is we will we'll commence the IPO process. So if you forgive me, I don't want to give any more detail than that.
Is there any scope for any government renewable grant money coming in at this stage?
Not at this stage, Matt, but as you're probably aware, is that there is scope for it to come in at the main finance level, and we do expect to have some form of significant government participation in the main financing.
Okay. Can you expand on that at all, Paul? With
No.
the new Labour government? Okay.
No.
Okay,
But
Jared.
the only thing I can expand on publicly is quite surprisingly, and there's a real bonus to us. As you know, we've been lobbying this midstream thing for a long time, and it was great to see Rachel Reeves come out and talk about expanding UK export finance's remit, so it can actually finance mines around the world to supply companies like TVL. Now, I'm not saying to anybody on this call that we are specifically targeting UK export finance for that, because we didn't think they had the capacity to do that, but now they do. Very clearly, very explicitly states that UK export finance can finance mines around the world, or provide finance for mines around the world, which can supply into the UK. We have commenced those discussions. So very, very encouraging from this government to be so specific about something that applies to us. So don't know where we'll get to with that, but we are definitely knocking on the door.
Some more from Matt. If you have commitments for investors for less than 25 million total, but can manage with the amount that you raise to get you to main funding or feed, would you be able to settle for a lower amount? Paul, I think, Paul, you've answered that on 10
Yeah, no,
million.
it's a good question, Matt. It's a good question, and the answer is yes. We've been clear, and I said it all on the previous two calls, that the minimum amount we need to raise is 10, and that's for the feeds, that is, and related, that is, and then the maximum is 25, which allows us to put money into long lead time items. So yeah, minimum 10, maximum 25.
The RNS says part of the financing could be an equity issue from private placement or rights issue. How would that TVL equity issue component be priced if TVL equity is raised soon? We want this TVL equity price to be as high as possible, so not linked to the current low Alkemy share price.
So as indicated, is that the money that's coming into TVL is debt, it's a convertible bond. And then, as Matt's indicated, it gets priced into the IPO. So whatever the IPO pricing is, and I've given some indication of the approach that we'll take towards it, is it gets converted into the IPO price, and as flagged in the RNS, it will be at a discount to the IPO price. So they get their coupon for the period of time that we own it for, and they get a chance to own stock in the IPO at a discount to the IPO price. And in terms of pricing, I indicated that the IPO is a standalone pricing mechanism for a business coming to market for fresh equity. It's got nothing to do with the Alkemy price or price today or anything. It's presenting a new business to the equity market, which will have bond finance alongside it, and the opportunity for institutional equity, government backing, etc., at the IPO stage.
Why don't you keep TVL in the Alkemy vehicle and fund from there?
We've said from the outset of Alkemy's formation that was never its business plan. Business plan all has been from day one is to incubate assets, gear them up, IPO them, trade sale them, somehow realize value from them, and distribute it back to Alkemy shareholders. There's always been the business plan. It will stay the business plan.
Okay, thanks, Paul.
I've got a general one, Sasha.
John, please.
Just Paul, you can have views on the lithium market and where we are in the cycle just now. And it's obviously you're thinking 2 or 3 years ahead in terms of the pricing then, but just
we're pricing agnostic because we are a refiner. We don't take price risk. So whatever the lithium price is of the crude carbonate we bring in from South America, we then sell it on to a battery manufacturer or some other end user, and we have a margin on the way through. And if you read the research reports from Zeus, the most recent one, we have a range of prices. We might charge $5,000 a ton, or $7,500 a ton, or $9,000 a ton, depending who the customer is, and we create an operating margin out of that. So it doesn't really matter what the lithium price is to us. We're in the refining business. We're a midstream merchant refiner that imports crude. When I mean crude, we're talking 90% plus lithium, and turns it into battery grade lithium. So we're essentially a merchant refiner.
Okay. No, thanks, Paul. It's good to hear that reiterated. Thank you.
Thank you, Paul. One question from Lee. Is there a chance for an Alkemy shareholder to get shares of TVL before IPO? I'm presuming he means not the in-specie transfer, but yeah.
That's actually a really good, and to be honest, we've not really given that much thought because we've focused on the institutional, but there's probably a liquidity requirement, which may be what he's referring to, that the brokers will have to manage. So yes, I don't know what the spread requirements are on LSE, on standard list. So yes, there's probably, but it wouldn't be a discount. It would just be at the same price as the institutional investors.
Okay. Are Miton still on the shareholder register?
I don't know, to be perfectly honest with you. I genuinely don't know.
Yeah, because they didn't TR1. Okay, I think that covers everything I have. So unless there is anything else, let's wrap up. Oh, would there be a backstop date for the holders of convertible bonds to convert if IPO or trade sale doesn't happen by a certain time?
Yeah, it's a good question. That's if what happens is, and obviously this is the detail of the docs, but broadly, we've looked at some previous convertible bonds that ABG have done, and if the timeline extends, then the bondholders get rewarded with a deeper discount on the conversion. So in other words, they sit there until it converts, but obviously the company has to pay for it because you're delaying them. So yes, the longer it goes, the deeper the discount.
If Alkemy are disposing of their shares in their incubated companies, does that mean Alkemy will never distribute dividends as such, but rather just shares in any other IPO that occurs in the coming years?
So again, good question. So if we end up owning something and it generates dividends and it's not appropriate for whatever reason to distribute the shares in that company, then we would pay the dividends. But the idea is to get value back into shareholders as soon as possible. So the default would be, what is the earliest point in which we can give Alkemy shareholders distributing in specie, benefits of a trade sale? If we end up holding an asset for whatever reason, and that asset generates dividends, we would pass, to the extent we're able to, pass those dividends straight through to Alkemy shareholders. Alkemy always wants to be an asset light distributor of value rather than something that accumulates assets and internally generates assets. He wants to distribute to Alkemy shareholders.
Okay. Thank you, Paul, and thank you, Tina, for that question. Okay, two more questions. First, Pensana. Is there an update you can give us on Pensana? I think, excuse the, I've had it from three people.
It's fine. It's fine.
The fortunes are linked.
Well, I'm not sure they are actually. The ABG certainly don't think the fortunes are linked. They're completely independent, but they're very similar. Is that the equity market in London is dead for companies like Pensana. If I go around London right now, apart from the big institutions, no one's interested. So we're funding Pensana at the asset level. Previously announced this, and that's quite challenging, having zero equity, zero participation. But we're making very, very good progress, and I'm confident that will happen. And we will demonstrate if we can do it on a rare earth mine in Angola, given the challenges that presents. I'm sure Tees Valley Lithium will be considerably less of a challenge. So yes, we think this model that we're developing both for Pensana and for Tees Valley Lithium is the future. And there's a lot of money who would prefer to put the money in at this asset level than they would to get at the public company level. And I know other people on this call are familiar with what I'm talking about. Is basically the equity market for junior assets in London has died. You talk to any of the brokers, and all the funds that used to be in the sector have moved away. So unless you can finance your assets at the asset level, London's not a place to be. So Pensana and Alkemy are going down the track of going where the money is, and the money is at the asset level. It's not in the brokers in London.
Okay, thanks, Paul. And final question: if you could just summarise what the next few months will look like for Alkemy, and then we can wrap up.
Well, as I said at the outset, we're targeting £5 a share in February, and you can hold me to that. Let's see if I end up owing you guys a drink or something if we don't quite make it. But we've got those 3 milestones, being very, very clear. One is the landing of the money, somewhere between 10 and 25 million US dollars. 2 is 2 months into the FEED study, and 3 is commencement of the IPO process. Those 3 milestones we think will translate into £5 a share. And then sometime during 2025, towards the back end of 2025, we're targeting an IPO, which we think Alkemy shareholders will get distributed approximately 40% of the shares of that IPO. And we think that will be worth around £10 a share to Alkemy shareholders. Okay. All good. Thank you, Sash. Thanks for everybody to jumping on the call. Appreciate your interest. And please do send questions through to Sasha so that next time we speak, I can hopefully answer those as well.
Thank you very much, Paul. Enjoy your day. Thanks, everybody.
Thanks, guys. Bye-bye.